How's everybody doing? Wonderful food from Brian again, right? Yes, Brian. All right, so my name is Paul Zarling. I'm the managing partner here at Client First, and it's my pleasure to introduce the speakers in just a few moments. But before, just a couple of housekeeping rules. If this is one of your first times here, it's not like church or school. If you need more food or drink, or go ahead and get it. Restrooms are in the back. If you want to silence your phones out of courtesy for other attendees. And then you should all have the presentation and a pen for notes. And then we're going to do a question and answer session here at the end to kind of go after that. So before I get to the speakers, a lot of you know we like to start with some trivia. And I know Justin's really the weather. And I like to have trivia related to the topics at hand, right? So we're going to have some insurance trivia. I've got two of them for you. What year in the U.S., don't worry about Europe or Asia, in the U.S., what year was the very first automobile insurance policy? I've got 1890 here. 1903. 1903 right there. 1930s. 1910. 1898. Travelers Insurance Group. 1898. Now, in my research, I also found something a little unique. What year in the U.S. did they bundle your home insurance policy? Prior to that, you had to have like fire, weather-related, riot, stuff like that. But where they bundled it all together, what year did they first start doing that? 1954. Okay. The 60s. You gotta narrow it down. 61. 1934. 1950, so not bad. 1950, that was the Insurance Company of North America, which later turned into Cigna. I think that was 1982 when they did that. So there you have it, 1898 for your automobile, and 1950 when they packaged the homeowner insurance together. So there's some trivia you can take home with you. So now, speaking of insurance, we're going to introduce the team. And it's been an interesting time, just in our economy, in our country, with all the prices going up. It hasn't been different with insurance, so they're going to kind of walk through what's all happened and how we're going to kind of navigate that. So we've got Keri Seiler, who's here. She's been in the insurance industry her whole career. Steve Seiler here, coming up on 10 years. And then we have Nancy Pick, who's been over 10 years in the industry as well. So they're going to be providing a lot of expert information. It's also right in front of you. So I'll be back in a little bit. I'm going to hand it over to Keri. She's going to get things going for us. So a warm round of applause for our presenters.
Good morning. Good afternoon, everybody. How are you today? Good. Oh, that's good. That's good. So as you know, we love to talk about insurance. I know you guys are just thrilled as well. We have been facing some challenges lately with inflation. Who has noticed? Right. Seems like everything is going up. We've got groceries, utilities, we've got vacations. I mean, you name it, everything is going up. One of the questions we get, though, is, well, but why insurance? Why is insurance going up? Some of the questions we've been asked is, haven't been any changes. Why would it go up? Haven't had any citations or accidents. My vehicle's older. Should be worth less, right? I work from home now, or I'm retired. I don't work at all. Why is it so expensive? I don't agree with my home market value, or my house is older. I don't feel it's worth as much. I mean, the company's putting some crazy amounts on dwelling right now, aren't they? I mean, if you've gotten your renewal this year, you see the dwelling amounts are going up by 5, 15, sometimes 17%. And your house didn't increase in value, right? We're going to break it down. We're going to say, okay, first of all, what is inflation? How does it affect our home insurance, our auto insurance, and what are we, your agents, doing to help you out? Which we've been very busy lately. All right. Okay, so here, we're just simple definition of inflation. Businesses are seeing their costs rise. To maintain a profit margin, they have to increase the prices that they charge for the products. So that's the business, right? The people doing all the wheeling and dealing. Then we've got the consumer side. The value of currency falls as prices of goods and services rise. So basically, raw materials, we start there, are at an increased rate. When the raw materials now get processed through the business, they've got all these lines of, they've got employees, they've got machinery, they've got gas to get the products to and from their businesses. So, of course, what are businesses doing then? They're passing it on to us, right? Yes. So, so thank you, but the world's got to keep moving. We also have employee situations where we've got employees who maybe got COVID and they're out for a couple of weeks. We've got employees who maybe the job was just phased out because of these huge inflation rates. So this is, in a nutshell, what's driving our costs to go up. Okay, here's a fun fact. It was kind of alarming for us. So the inflation rate, 7.9 between February of 21 and February of 22. That's a couple months ago. It's risen since then. And if you see here, it is the most significant rise in 40 years. We're seeing that across the board, and I'm sure you guys are as well. All right, so with that, I'm going to hand it off to Steve. What Steve's going to do is he's going to kind of break down what goes into a home, what goes into an auto, and kind of give you a visual for how each one of these things will, in the end, we'll explain it, how it'll affect your insurance premiums. All right, so with that, I'm going to give it over to Steve.
Well, good afternoon, everybody. Unfortunately, I get the wonderful topic of inflation and building materials. So try and stay with me. Hopefully, everybody will stay awake. If not, you brought a pillow. We'll be good. All right. So the main components in building a home we have up there are lumber, gypsum, which goes into drywall, paint, and concrete, plastic insulation, and copper. So we'll start with the lumber, which since September of last year, lumber has gone up 79.5%, which is insane. It's incredible. Personal experience, I went and bought a 2x4 because I had to build some shelves. $5.98 for one 2x4, which 2 years ago I paid $1.47. It's just constantly going up. A single home to build that increased $18,600. The average 2,000 square foot home uses 16,000 board feet of lumber and 6,000 structural panels. So plywood. Plywood is incredible right now too. It's like $80 a sheet. Why? Got a limited supply of softwood, which is the 2x4. That's caused by the wildfires, high tariffs, because we get a lot of our 2x4s from Canada, because they have more woods than we do. Up in Canada, they had the trucking strike, so that increased everything, and also the worker shortage. Now, if you do want cheap lumber, buy popsicles. It's a good idea. Very good idea there. So, gypsum. Gypsum is a component of drywall, paint, and concrete. The price of gypsum, before I came here, I looked it up, it was $360 a ton. Now, considering the fact that 2 years ago it was $28 a ton, there's a little bit of an increase there. So that leads to exterior paint going up 30.3%. So if you want to paint your house or even the inside, that's 21.2%. Drywall increased 20.7%. Concrete block, not that bad. It's only up 2.8%. So that one's not that bad. Now, when we get on to the other ones like plastic, PVC piping went up 41.3%. That has a lot to do with shortages and the price of crude oil, because crude oil is one of the main components to make plastic. Insulation has gone up too. So if you want to re-insulate your house, you're going to pay another 23.2%. So hope everybody's insulated really well. Copper. This one still. Copper is up 125% just since March of 2020. All right? It is up. Mining, nobody wants to mine for it. Deposits are getting smaller, but nobody wants to mine for it. They're using copper in electric vehicles, batteries, so everything's boosting up there. So in your home, we've got copper plumbing. One of the main components of it. So, $50,000 of lumber in 2020 built 10 houses. Okay? The same amount of lumber only builds 2 houses in 2021. Now, it's gone up a little bit more. That would probably be, I'd say, 1 3/4. I love that graphic there. Weather damage has also increased. So last year we had, I lost my, there it is. Last year, $270 billion in losses for natural disasters. Insurance only covered up $129 billion of it. The rest was deductible, lack of coverage, with everything going, but I'm glad we don't have one of the 19 states that requires named insurance deductibles, which that would be anywhere from 1% to 10% of your dwelling value, which is a deductible that you would have to pay. So, thank goodness we're not one of those 19. All right. Now we're going to look at the cars. Everybody's fun subject on the cars. So, we all know new cars. On the graph that we have here, new cars, they don't look that bad. But then you consider used cars are up 40%. Your home prices, 15%, 17%, around there. So the new cars, we're having the problem with the microchip shortage, slow. Wire. We've got shortages everywhere. I mean, you drive past any kind of car lot, and there's barely anything there. What they're doing is they can't get the chips to do the safety features on the cars. So they're building the cars and putting them off on the lot, waiting for the chips. So if you do buy a car, you got to wait at least 2 to 3 months before you can pick up that new car. So they are stripping some of the safety features out of there. So you're getting a high price for a low quality product. Not what you want to hear when you're going to buy a new car. Used cars, oh yeah. 40%, actually 40.5 since March has gone up. Again, the microchip shortage, people are hanging on to the used cars, and I know there's people that like to buy a different car every other year, every 3 years. Unfortunately, they have to hang on to that. So in turn, that raises car parts. You have to maintain the car a little bit more. Car parts are up 12.6%. That leads to supply chain issues again. You know, we've got ships sitting in harbors with car parts on them that aren't getting unloaded. So you're waiting 2 to 3 months just for a part. That's it for me. And we're going to bring Keri back up.
All right, so we got a pretty good idea of what's all going into a house and a car when there's an accident or we need to make some repairs. Yeah? Okay. Let's recap here, or learn. What is insurance? got a graph here. Anyone have an idea of how insurance works? Just, any thoughts?
You're basically pooling your money, so if somebody has a loss, the people out of the pool, kind of share in that.
Correct. So what was said over here is that we're pooling our money so that when there's a loss, you can take it out and use it. That is absolutely true. So imagine this. We've got, here, this is us. We're putting money into a big pot. Like we're all pitching in some money, and then as we need it, it's there. When we have a car accident, an injury, something happens to our home, we take it out. Well, when we're dealing with inflation and all these increased costs of home and car repairs and new cars and all that fun stuff, then this reserve gets low. And in order to make sure that we have enough money in that pot, we've got to do what? Raise the premiums. Yes. So, it's not fun, but this is a huge reason of why our premiums are going up. All right, so to summarize, higher costs to repair or replace property due to inflation makes it necessary to increase insurance premiums so that everyone who put money into the insurance pool can take it out when they need it. You don't want to be the guy that the company says, oh, yeah, sorry, we're out of money. Right? All right. Okay, so the fun part here. What are we doing at Client First to help you? All right. So we are doing, very frantically I might say, renewal reports every day. So what we are doing is we are comparing your premium and your coverage from last year or 2 years ago to what the company is saying this renewal is going to need to be increased to. All right. So how we come to that number is we first do comparisons. Then we encourage client meetings. So I'm going to say this to all of you. Give us a call. We'll either have a phone meeting or we will have a meeting in person. It's good to review your insurance. I know we call you guys and we either get lost in the spam number or you think about us when you need us. But we would love for you guys to give us a call or come in and sit with us and we'll kind of go over. We'll say, okay, what is needed? What is not? Where can we save some money? Where should we keep coverages in place? If a policy is more than 3 years old, we can ask for a new inspection. We all started at a certain amount on our dwelling, right? And the most common question I hear is, okay, it went up this year by like 20%. Why? Well, that's a little higher than the normal. So we would look into that. We would say, oh, okay, well, let's do a reinspection. Let's see what's actually going on and what is the appropriate amount to have your dwelling covered for. All right? We also can raise deductibles for a short period of time. I know a lot of you are not comfortable raising your deductibles to 500 or even 1,000 on the home and the auto. However, what we can do until this, until we move past all this and we get back to a normal state of things, we can raise those deductibles. It will have less impact on your pocketbook and you'll still have the coverage. That is one thing we never want to do. We never want to remove coverage if we don't have to. Now, the exception, of course, would be that dwelling amount, where most companies say, all right, as long as we all agree on the amount, we're going to guarantee the repairs or the replacement. Meaning, as long as we're on the same page, doesn't matter. We get up to the roof, we run out of money, they're just going to keep going until you're whole again. We're also going to review for discounts. A lot of ways, and we have one main company that we use who we're seeing dwelling values increase by 30, 40,000, but the premiums aren't really jumping that high. So what they're doing for you is they're saying, if you qualify for discounts, which believe me, we hunt for them for you guys. Like, you know me. Who has sat in a meeting with me? And I'm asking you everything, including your blood type. That's what we're doing. We are looking for discounts for you. Where you went to school, what organizations you're part of, what was your trade, what is your trade, what do you do for fun? I mean, there's all kinds of ways that we can get you discounts and bring that premium down. What the companies are doing is they're saying, okay, well, if you're one of these people that has a discount involved, we're going to raise that up for you so this doesn't hurt as bad. Okay, so there's not much they can do industry-wise as far as the base cost, but when it comes to deductibles, we can look more. We can be more thorough. We can say, hey, has anything changed in the last couple of years where you might qualify for some of these discounts? And then lastly, we can requote you with other carriers if we are just not sure that the policy that we have is serving us in the best way. Now, we don't want to look for premium, but sometimes, let's face it, if our premium has gone up $500, $600 in some cases, we need to do something. We always say, you know what? You can be insurance poor, meaning you can have all the insurance in the world, but then you have nothing to live on. So, we'll make sure that you're covered appropriately at a decent rate. That was it. All right, nope, here we go. Client communication. This is a big one. Who's gotten an email from us in the last 3 months? Okay, we have gone to great lengths to make sure that 60 days before your renewal, you are getting an email, a communication from us, a letter. We're putting it out on our social media, our website, all this fun stuff of what's going on and what we are going to do. And basically, it's what we just covered as far as let's fill you in on what's going on in the industry. Let's sit down, let's review, let's see what's happening so that we can make sure that, again, you're covered at a nice price, but you're not compromising coverage anywhere. And then the last thing that we're doing, I kind of already covered that, our communications and presentations, client letters, and we're constantly talking about it. So forgive us if you call and I've asked you for the 5th time, hey, do you want to come in and review your policy with us? It's not that we're trying to sell you anything more. It's actually just the opposite. We are trying to help you so that you can afford the insurance. Okay? All right, so we covered a lot of information. Paul's going to come up here. We're going to do a Q&A panel, and then after that, you guys write down your questions because we know you've got a ton of them.
How many of you have been already affected by a lot of this? By show of hands. Oh, yeah. So let me give you a couple personal stories for myself. So it was November of 21, so not that long ago. My wife is driving our Honda Odyssey with our daughter on the way to a music lesson. Right? It's about 5 o'clock at night. What do you think is going to happen? Going driving through the country. She hits a big deer. Right? Thankfully, no one's hurt. No physical injuries. But the minivan, not so much. Okay, so we take it to the place we normally take it to be fixed. They give us the estimate. They're like, hey, Paul, no problem. We should be able to fix this thing. Okay, great. 3 weeks pass. 6 weeks pass. 9 weeks pass. Coming up on 12 weeks. What do you think the main issue is? Parts. Exactly. They can't get a part that has to go by the radiator, and then once that's in, the rest of it has to be assembled. They can't get it. And there's maybe 2 in the nation, and 2 other people wanted it. Right? So we had to go back to the insurance company and say, gotta total the car. So I know, right? I had this nice minivan. It's been all around the country, driving my kids to school or to taking vacations. So we had to total the car and I had to go find another car. You think that was fun shopping for a used car? No, right? Because is there any negotiating going on? Nope. They're just like, oh, there's the price. Really? Okay. Second situation. It's January of 2022. My kid's car, older Honda Pilot, just shy of 250,000 miles on it. Right? Stops running. Right? Take it to our regular repair shop. Gives her the estimate. What do you think happens? Can't get parts. So what we got to do? I just take it and sell it to the parts junk dealer, right? Exactly. And then now I got to go find a used car. Think that was enjoyable? No, it wasn't. And the used car prices, I like to think I'm pretty frugal and everything. I was just like, oh, I can't even. There's no negotiating. You just kind of pay the price you have to. Now, third one. I have a leased car, right? Dealership calls me up, hey, Paul, we want your car. Yeah, I know you do. Right? It's a used car. right? What do you think I'm going to do? Am I going to sell it to him? Or is it cheaper for me to buy out my lease? Buy out the lease is exactly right. That car right now, if I bought it out, is about $24,000. $24,000. What do you think that car is on the lot? 35 is exactly right. You play a great straight man. That's exactly what's going on, right? So we're all dealing with this, or like you have like a home coverage. So I bring those stories up because this is what our team's been working through with a lot of our clients. And so we focus on our financial clients and our insurance clients, and then we're getting a lot of referrals from those two areas as well for people that maybe the first time doing something with us. So there's been a lot of volume of calls, and really appreciate what they're doing. So I do want to get us some questions. This one has a lot of dynamics with it as well. But your car's older, right? Steve talked about the rise in value of everything. Is it better to like take some coverage off, or should I just keep comprehensive versus collision? What's something to do with an old car?
So clearly we know who the big mouth is. Of all of us. So we're asking them, when is the good time to remove full coverage from a vehicle? Should we put liability only on it? Or what can we do? So what we would do is we look at the market value. Not necessarily, remember when Kelley Blue Book was always your go-to? Now it's more of a market value thing. So what we would do is we would look same year, make and model, mileage. We would look, what's it selling for in Wisconsin? Okay, so if we've got, still worth $8,000, $9,000, $10,000, now remember, all those values are going up. If you get into an accident, you want that car replaced, right? Okay, so if we're still pretty high on the spectrum there, we're definitely going to keep full coverage on that vehicle. Now, we can raise deductibles to make it a little less expensive, but we definitely want to keep, especially resale value, right? Like, we definitely want to make it whole again. We could probably sell it to somebody for like $12,000. When we get lower, we're just like, $2,000, $3,000. If I get into an accident, I'm not repairing this thing. I'm just going to go buy a new one. That's the time where you just say, you know what? It's important that I have insurance, which would be liability and medical coverage. In the event that I get into an accident and I damage someone else's property or hurt someone else. That's when we just want to dial it all back and just say, okay, you know what? I don't care what happens to this car, but I do care what happens if I cause, an accident. Because, of course, we don't want to get sued. So that's the appropriate time.
Okay. Thank you. I have a question now for Nancy. And we've talked about economy changes, but I do want to ask a question. Like sometimes with life just happens, right? So there's life changes with some of you. Maybe they lost a spouse, or maybe they got divorced, unfortunately, but their rates would go up. What's going on there?
Well, when you're married, or you get a married discount, and then you would have 2 cars, probably, if you and your spouse, or maybe 3 cars, and you would lose a multi-vehicle discount. So those two discounts would be lost. And sometimes the rates go up when you're older. Like I forget the age. 80? When it's 80. The rates go up. People are like, why did they go up? I'm older and don't drive that much. But they do the math, and there's actuaries that work for the companies, and they figure out. They just go by the statistics.
Right, so there's age at play, there's multi-person discount, multi-vehicle discounts at play. Right, marriage.
I got it. So I think the question was just a tad confusing. So when we go to Florida, we're going to spend 6 months down there. Are we driving our vehicle up here? No. So give us a call. There's no reason to keep full coverage on it unless someone's going to be driving your vehicle while you're up here. So let's say you've got a child who's going to come and like, ooh, Dad's away, I'm going to grab that Mustang. Keep the coverage on, all right? However, if you're going to be hanging out down in Florida for 6 months, the vehicle's up here, it's registered here, you're going to put it in storage, give us a call, and we will reduce the full coverage down to down to storage only, which is comp. So what that's going to do is going to take care of the vehicle if someone breaks into it, if there is rodent damage, and that's a big one lately. Does anyone remember? We actually covered this in a previous seminar. The rodents has become a huge deal because now they're using this environmental friendly wiring for the engines, which is actually attracting them. So, yay, thanks. So we can put it in storage coverage, and that would be a way to lower the cost. As we stated, they're going to calculate what the vehicle should be if it's driven year-round. So we just want to make sure, give us a call. We'll reduce that coverage for you and make it a lot less expensive. You're going to have some expenses down in Florida anyway, so just give us a call. We can always help you out.
Cool. All right, I've got a question for any of you. So, would it ever make sense for someone to pay a claim out of pocket rather than file an insurance claim?
Okay, they're all looking at me. All right, so what is the first thing we generally tell you if there's no injuries and your vehicle's still drivable? What's usually the first thing we tell you when you call us? Call the police is one, yes. Fix it yourself on that wavelength, yes. So what we always say is, hey, let's go get some estimates first. Let's see how much it's going to cost to repair the vehicle. Now, if it's going to cost, every day we're surprised at how much things are going up, right? That bumper that used to be $200 is now closer to $1,000. So we're going to go get estimates. We're going to need them anyway if we get the insurance company involved. So we're going to go get some estimates. Then you're going to give us a call back and say, hey, you know what? This turned out to be like $6,000 and I've got a $500 deductible. All right, at this point, yes, it makes sense to file a claim. Now remember, we want to give us a call right away when it happens. We don't have to file the claim, but we can advise you what path may be the most beneficial for you and keep you out of trouble with the law if we haven't filed a police report and things like that. Okay? Crickets. Any questions on that? So the comment was a cement truck backed into them at the grocery store parking lot, and the company's like, let me just pay for it. Why would they do that? Right. They don't want to let the company know that they got into yet another accident. Because what's going to happen to their policy? They're driving heavy machinery, so yeah, it's already expensive. So, and if that happens, give us a call or give your agent a call, okay? We can help navigate, we can help safeguard you so that you're not left holding the bag because these guys said they were going to pay, but now they're nowhere to be found. Anyone else? Okay, let's tackle umbrella. So umbrella is, honestly, it's what it sounds like. It's an umbrella you carry around with you, all right? Liability is that umbrella. So you're over here on the auto, over here on the home. And liability is what? What you are responsible for. So if you damage someone's property, I love to use the example you're traveling and you're in a hotel room and you light a candle and burn the place down. That has happened more than you can imagine. People get great ideas when they're all whooping it up, and then they're like, oh my goodness, look what just happened. So an umbrella is going to do that for you. It's going to follow you around. In some states and in some countries, they won't even let you leave until you can prove that you can take care of that claim. So you could be stuck in California. Not a bad place to be stuck, but depending on what part you're in, right? So you could be stuck in that state until we've got a firm grasp on who's going to be paying for this. Because they don't want you, flee the scene, that kind of thing. So an umbrella, you're right, they're usually dirt cheap because you're carrying a bulk of that liability on your home and your auto policy. We're just kind of bumping it up a little bit and giving you a little broader coverage for when you need a little more on the auto, you need a little more on the home.
So we're recommending, yes?
We are always recommending an umbrella. It's usually a couple cars, a house. It's usually about $120 a year. That is one rate we have not seen go up. So what that tells us is there's not a lot of liability claims. It's all being held in physical situations, most of it anyway, with the cars and the home and real property. So let's define guaranteed and replacement cost. Okay, so replacement cost is we say, all right, we've got $200,000 that we're going to insure the home for. That's what's listed on the declaration page. The company's going to say, all right, you know what, we're at 200, and then if you need more, we're going to tack on another 20 to 25%. That is replacement cost on your dwelling. Guaranteed replacement cost is what a lot of the companies are leaning towards now, because it's really hard, especially now, to get a gauge on what the actual value should be. So guaranteed is, we got 200 on the home, right? We rebuild your home, and then we get to the second story, and all of a sudden we all like, uh-oh, we don't have enough to rebuild the second story, let alone put the roof on. So especially, this is a great example, this time period with inflation just going crazy, this is a time where that is invaluable. So the insurance company is going to say, you know what, you have guaranteed, which means you agreed to what we said it should be, therefore, we're just going to make you whole. Doesn't matter if it's going to cost us $1 million to rebuild your house, that's what we're going to do. So we always suggest guaranteed replacement cost if the company affords for it. Correct. It sounds like a play on words, but it is not. It is two very different coverages. So the companies that are offering replacement cost only, that's the strength of the company. They're saying, I'm going to hold your feet to the fire on this one. You know, if someone's going to be at fault other than me, it's either going to be you, it's going to be your agent, or it's going to be whoever, you know, however you came to that number. But they're off the hook after we exhaust the policy limits. The guaranteed is your sign of a strong company who says, you know what, as long as in your best faith, you agreed and did what we asked you to do, which usually isn't far off from what we suggest, then we're all good. We're going to send an inspector out. We're going to make sure that you, the consumer, the agent, and the company all agree on the same amount of coverage. Once we've done that in good faith, we're also going to be in good faith, and we're going to just rebuild for you. So whenever you see the difference between replacement cost and guaranteed replacement cost, that shows you the strength of the company that is offering the coverage to you.
Well, a lot of our companies, they'll need photos. They're discounted rates often. Sometimes they'll need an appraisal. They'll need photos of the inside, the trunk, you know, front, back, sides, to make sure it's complete. And then if it's not complete, if you're still working on it, then it's a different coverage.
Yeah. She's wondering about age discrimination, because we brought it up, right? Age 80 and older, it happens.
Yeah.
It's true, right? Let's talk about it.
All right, who thinks it's fair to penalize a teenager, young driver, just starting to drive, and charge him more than an experienced driver? I think that's fair. Run me off the road all the time. Okay, so, yeah, as we get older, we are like, wait a minute, I don't have any claims, I don't have any accidents, what the heck? Why am I being charged more? It's honestly just the actuaries. They're doing a poll over who gets into the most accidents, and unfortunately, it's the young ones and the older ones. And we don't agree with it, but it's just a fact we have to deal with.
Yeah, so give us a call. There's the number if you need assistance there. For more questions on whether it's insurance or anything else with your financial picture. We do have a feedback form that's with you. Please fill it out. Sarah and Morgan are here. They're back at the table. Just please hand those in. Let's be able to fill those out. Next month is June 22nd, 12 noon. Now we're coming under the summer series. We're doing noon only, not the evening. So noon only, June, July, August. That's going to be the Truistic Financial Planning team. There they are. We have Justin, Morgan, Chris, Brad, and Thomas. We're looking forward to that. And then there's our number. So we're really here to help you secure that financial confidence. Like I said, if you have further questions, the team's going to be here. Feel free to touch base with them or connect with them later on by giving them a call. So thank you for coming. Please turn in your feedback forms and a round of applause for our team. And enjoy the rest of your day. Thank you.